everyone, it's tax season. We all used to love certain season, but it's different if you hear tax season. We are already stepped into the fourth quarter of this financial year, so everyone's major concern is filing the income tax return. What is the income tax? An income tax is a tax that governments impose on an income generated by businesses and individuals within their jurisdiction by law. Taxpayers must file an income tax return annually to determine their tax obligations. Income taxes are a source of revenue for governments. They are used to fund public services, pay government obligations, and provide goods for citizens. Well, there is a small information about the slabs decided by the government. So, who are all need to pay tax? The government already pre-decided the certain slab based on the income category. The categories are here. Income tax slabs for resident individual below 60 years of age. If you see, as per slabs, if your income less than 2.5 lakh per annum, then you are not required to pay income tax for the government. If your income between 2,50,001 rupee to 5 lakh, then you have to pay 5% of tax. If your income is 5 lakh 1 rupee to 10 lakh, then you have to pay 20%. If your income is rupees 10 lakh 1 rupee and above, then you will come under 30% tax slab. You all are seems to be worried now. There is always a key for any lock. Yes, your key to save tax is investing your money into the right saving scheme, which is tax saving scheme. As you are aware, there will be a certain plan where you can invest and save your income tax. Well, how many of you know that VPF is a better option than PPF and also helps to save your income tax? If you have planned to invest in PPF, which is very familiar amongst the tax saving scheme, better you also check out the VPF. What is VPF? VPF is a type of provident fund. Simply stated, VPF or voluntary provident fund is an extended version of the employee provident fund. If you are in employment, the employer deducts a fixed amount every month. For example, 12% of your basic pay including journey's allowance, and transfers it towards your employee provident fund account. In other way, even employer himself is also liable to contribute 12% of basic pay including journey's allowance from his side towards your EPF account. This means both employer and employee contribute towards the EPF account of the employee. If you are a salaried individual and invest in the PPF to save tax under Section 80C, you may be overlooking the voluntary provident fund whose returns be that of the PPF, provide the same tax benefit and come with the safety associated with the government investment scheme. VPF offers a good interest rate as compared to the traditional investment alternatives like PPF, FDs and etc. The present rate of interest is 8.65% per annum. The VPF yields the same interest rate as the EPF. The interest rates of all types of provident funds keep changing from time to time. While PPF rates are revised quarterly, VPF or EPF rates are revised annually. An analysis of interest rate of the VPF or EPF and the PPF shows the former has always been higher. We have some differential between the VPF and the PPF. If you see, in VPF we do not have any lock-in period. If we want to withdraw, we can withdraw the fund at any time, but keep it in your mind, whichever amount will be withdrawn less than 5 years will be taxable in VPF account. In case of PPF, you cannot withdraw your fund until it get matures. PPF is having a locking period which is 15 years. In between, if you want to withdraw your PPF account, then you have to complete your 6 financial years so that you can withdraw your PPF amount partially. The rate of interest which is in VPF is 8.75%, whereas in PPF it is 8% only. You can approach your employer to start your VPF account. If you want to start the PPF account, you have to visit any bank branches or post offices. In VPF and PPF, both having easy monthly contribution method, you can save up to 1.5 lakhs per annum under Section 80C, and both these plans are secured and backed by the government. Hope you got an idea now. Whether PPF or VPF, decide your option to invest in right investment plan and make it as a good investment. Both are tax saving, but if you want to minimize your lock-in period, then you can opt for VPF. VPF gives better rate of interest than PPF and also safest investment plan like PPF. Thanks for watching guys. Watch this space for more.